Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the recent surge to $69,000 suggesting strong bullish momentum. The forecast price, while showing some minor fluctuations, continues to predict an upward trajectory, indicating that the bullish sentiment is likely to persist. The support price at $65,858.01 provides a strong foundation for this strategy, acting as a safety net in case of a temporary pullback. Therefore, the investment strategy for Bitcoin involves taking a long position. The entry price should be around $67,500, allowing for a small dip before entering the market. A stop-loss order should be placed at $65,858.01 to protect against significant downside risks. Target price can be set at $69,032.0, aiming to capitalize on the predicted upward movement and reach the resistance level. This long-term strategy capitalizes on the positive price momentum and aims for substantial gains as Bitcoin continues its upward trajectory. Given the provided historical price data and forecast for Ethereum, a moderately aggressive investment strategy would focus on a short to medium term approach to capitalize on the expected upward trend. The historical prices demonstrate a generally upward trajectory, with recent fluctuations around the $2,600 level. The forecast suggests continued growth, with prices potentially reaching $2,720 within the next week. This indicates a bullish outlook in the short to medium term. Therefore, a long position on Ethereum is recommended. A suitable entry price would be around $2,620, slightly below the current price, allowing for a margin of safety. The stop loss should be placed at $2,580 to mitigate potential downside risk. Target price can be set at $2,700, aligning with the upper end of the forecast range and offering a reasonable profit potential. This strategy balances risk and reward, aiming to capitalize on the expected price appreciation while managing potential losses. Given the price trends and forecast for Solana, a medium-term investment strategy appears most suitable. The historical prices demonstrate a clear upward trend, with recent consolidation around the $160. While the forecast suggests a slight dip in the short term, it also indicates a continued upward trajectory over the next few weeks. Therefore, a long position is recommended. An entry price around $160 would allow you to capitalize on the potential for price appreciation towards the resistance level of $167.52. A stop loss should be placed at $157.64, just below the support level. To mitigate risk, target price can be set at $167, aiming to capture a significant portion of the potential upside. This strategy balances risk and reward, allowing for potential profits while minimizing potential losses in the medium term. Based on the provided Ripple data, a medium-term investment strategy appears most suitable. The historical price data reveals a consistent upward trend, with recent fluctuations around the $0.54 mark. The forecast suggests continued stability with slight fluctuations, indicating a lack of strong bullish or bearish momentum in the immediate future. Considering these factors, a long position on Ripple is recommended. A conservative entry price of $0.535 aligns with the recent price action and provides a buffer below the current market value. A stop loss at $0.5245, the identified support price, protects against significant downside risk. The target price should be set at $0.5484, the resistance level, aiming to capitalize on potential upward movement within the medium term. Cardano shows a slight upward trend in recent weeks with a forecast suggesting continued growth. The support price at $0.358 acts as a cushion for potential price dips, while the resistance at $0.4005 presents a ceiling for immediate upward movement. Given this context, a long-term investment strategy appears promising. To capitalize on this potential, we can enter a long position at the current price of around $0.352. Setting a stop loss at $0.343 would protect against significant price drops. Our target price should be set at $0.4005, aiming to capture the full potential of the resistance level. This strategy allows us to benefit from Cardano's upward momentum, while mitigating risk with a well-defined stop loss. Based on the provided SU price information, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with recent upward movement, but the forecast suggests a slight pullback in the coming week. The current price is close to the resistance level of $2.02, indicating potential for a short-term correction. Therefore, a short position is recommended. An entry price of $2.05 could be considered, aligning with the current price and the potential for a downward correction. Setting a stop loss at $2.12, slightly above the current price, helps to mitigate potential losses if the price unexpectedly rises. The target price should be set at $1.90, allowing for a reasonable profit margin while considering the forecast and support price of $1.8424. This strategy aims to capitalize on the anticipated short-term price dip in SU. Given the price trends and forecast for Filecoin, a medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating pattern, with recent increases suggesting potential for further growth. The forecast indicates a continued upward trajectory, with prices potentially reaching $4.07 within the next week. The support price at $3.726 provides a safety net, while the resistance at $4.206 highlights the potential for further price appreciation. Therefore, I recommend a long position on Filecoin. An entry price of $3.85 aligns with the current price and recent upward momentum. A stop loss at $3.75 protects against potential price reversals, while a target price of $4.10 allows for profit taking before reaching the resistance level. This strategy aims to capitalize on the anticipated price increase while managing risk effectively. Based on the provided data for ThetaNetwork, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with periods of both upward and downward movement. Forecast price suggests a gradual upward trajectory over the next week, indicating potential for growth. However, the price is currently near its support level, suggesting potential for consolidation or even a slight pullback before continuing its upward momentum. Therefore, a long position is recommended for ThetaNetwork. An entry price around $1.30 would allow you to enter the market near the current price level. A stop loss should be set at $1.25 to protect against unexpected price drops. The target price should be set at $1.40, aiming to capitalize on the projected upward movement in the forecast. This strategy balances risk and reward, allowing for potential gains while minimizing potential losses. Based on the provided price history and forecast for Dogwifhat, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with periods of both upward and downward movement, while the recent 2-week price change shows some volatility. The forecast suggests a potential upward trend over the next week. This suggests a cautious optimism for the future price action of Dogwifhat. Considering this outlook, a long position is recommended. An entry price of $2.65 aligns with the current price and allows for potential upside movement towards the forecast highs. A stop-loss order should be placed at $2.54, below the recent lows, to limit potential losses. The target price is set at $2.79, representing a reasonable profit target based on the forecast. This strategy aims to capitalize on the anticipated upward momentum, while managing risk through a well-defined stop-loss level. Based on the provided price information for Stellar, a short-term bullish investment strategy appears promising. The recent price history demonstrates a steady upward trend, with the price consistently hovering above the support level of $0.095. The forecast price further strengthens this bullish outlook, suggesting continued price growth in the coming week. The current price is close to the support level, presenting a potential entry point for a long position. A suitable entry price would be around $0.095, aligning with the support level and the current market price. The stop loss should be set slightly below the entry price at $0.094 to minimize potential losses. The target price can be set at $0.0973, the resistance level, allowing for a potential profit of approximately $2.4. This strategy capitalizes on the short-term bullish momentum and aims to profit from the anticipated price increase towards the resistance level. Starknet exhibits a mixed price trend over the past 2 weeks. While the historical prices demonstrate an overall upward movement, the recent forecast suggests a slight pullback in the short term. The support price at $0.3917 acts as a potential floor for the price, while the resistance at $0.4346 indicates the upper limit for immediate price appreciation. Considering this scenario, a cautious approach with a medium-term investment perspective appears suitable. To capitalize on the potential for a rebound after a minor correction, I recommend entering a long position at the entry price of $0.405. This price point offers a good balance between the recent price action and the forecast, allowing for potential upside while mitigating the risk of significant losses. The stop loss should be set at $0.392, below the support price, to protect against any unexpected downward movement. The target price can be set at $0.43, aiming for a moderate profit before reaching the resistance level. This strategy allows for a measured approach, taking advantage of the underlying upward trend while managing risk effectively. Given the price trends and forecast for Pendle, a medium-term investment strategy focusing on a long position appears promising. The historical prices demonstrate an overall upward trajectory, with recent fluctuations suggesting consolidation. Forecast indicates continued upward momentum, with prices potentially reaching $5.48 within the next week. Considering this, the suitable entry price for a long position could be around $4.85, aligning with the forecast and providing a buffer below the current price. A stop-loss order placed at $4.649, the support price, would protect against unexpected downward movements. The target price could be set at $5.41, capturing a significant portion of the anticipated price increase. This strategy allows for capitalizing on the bullish sentiment surrounding Pendle, while managing risk effectively. Based on the provided historical price data and forecast for render, a cautious investment strategy appears appropriate. The recent price history demonstrates some volatility, with fluctuations above and below the $5.30 level. While the forecast suggests a slight upward movement, the potential for further price dips cannot be ruled out. Considering this uncertainty, a long position with a conservative approach is recommended. An entry price around $5.25 would allow for a margin of safety below the current price, and the support level of $5.207. A stop loss at $5.15 would help mitigate potential losses if the price declines unexpectedly. The target price could be set at $5.50, aiming to capitalize on the forecast's upward trajectory, while staying below the resistance level of $5.529. This strategy prioritizes risk management and seeks modest gains within a defined time frame. Given the price trends and forecast for VeChain, a short-term investment strategy focusing on a long position appears promising. The historical prices show a consistent upward trend, with the current price hovering around the support level of $0.022. The forecast suggests VeChain will likely continue its upward momentum, reaching prices around $0.024. The resistance level at $0.0235 suggests a potential ceiling for the near term, but the overall trajectory points towards continued growth. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price of around $0.0225. A stop-loss order should be placed at $0.022 to minimize potential losses if the price unexpectedly drops. The target price could be set at $0.024, allowing for a profit when the price reaches the forecasted upper limit. This strategy capitalizes on the anticipated upward movement of VeChain, while mitigating risks with a well-defined stop-loss order. Based on the provided Binancecoin price history, forecast, support, and resistance levels, an aggressive investment strategy would focus on a short-term approach to capitalize on the anticipated upward momentum. The historical price data shows a consistent upward trend, with the current price hovering near the support level of $592.6. The forecast suggests further price increases, reaching up to $606. This indicates a bullish outlook in the short term. Therefore, a long position is recommended to profit from this potential price appreciation. The entry price should be set at $595, slightly above the current price and the support level, allowing for a buffer against potential dips. The stop loss should be placed at $590, below the entry price to limit potential losses. The target price should be set at $605, aligning with the forecast and offering a reasonable profit margin before the price potentially reaches the resistance level of $606.3. Given the current price trends and forecast for Conflux, a cautious investment strategy would focus on a short-term approach. The historical prices show some volatility, with recent fluctuations around the $0.16 mark, while the forecast suggests a slight downward trend over the next week. Staying near the support level of $0.1558, it is important to note the potential for short-term bounces. Therefore, a short position with a tight stop loss is recommended. An entry price of $0.166 would allow you to capitalize on the potential decline, with a stop loss set at $0.168 to limit potential losses. The target price should be set at $0.156, aiming to capture a portion of the forecasted downward movement. This strategy prioritizes risk management and aims to profit from short-term price fluctuations while acknowledging the uncertainty surrounding the longer-term outlook for Conflux. Given the provided information about Worldcoin, a short-term investment strategy appears to be the most suitable approach. The 2-week price change shows a general upward trend, with the recent price hovering around $2.28. Forecast indicates continued upward momentum, with prices potentially reaching $2.63 within the next week. This suggests a bullish outlook in the short term. Therefore, a long position in Worldcoin is recommended. Conservative entry price could be set at $2.30, allowing you to buy in at a price slightly below the current market value. The stop loss should be placed at $2.25 to limit potential losses if the price unexpectedly drops. The target price could be set at $2.55, aiming to capitalize on the forecasted price increase while leaving room for potential fluctuations. This strategy allows you to participate in the anticipated upward movement of Worldcoin, while managing risk effectively. Based on the provided information for Avalanche, a medium-term investment strategy appears most suitable. The historical price data shows a generally upward trend, but recent fluctuations suggest some consolidation. The forecast indicates a stable price range around $28, with potential for slight growth. The support price of $25.84 provides a safety net, while the resistance price of $29.02 signifies an immediate ceiling. Considering these factors, an investment strategy focusing on a long position appears prudent. A strategic entry point would be around $27.50, allowing for a potential price increase toward the resistance level of $29.02. The stop loss should be placed at $25.90 to mitigate risk in case of a sudden downward move. Target price of $28.80 offers a reasonable profit margin, while aligning with the forecast's upward trajectory. This medium-term approach allows for capital appreciation while minimizing exposure to excessive volatility. Based on the provided price information for Jupiter, a bullish investment strategy appears promising. The historical price data reveals an upward trend, with the recent price hovering near the support level of $0.8889. The forecast predicts continued growth, reaching as high as $1.08 within the next week. This suggests a strong potential for price appreciation in the short to medium term. Therefore, an investment strategy involving a long position in Jupiter is recommended. A suitable entry price could be around $0.913, aligning with the current price and allowing for potential upside movement. A stop-loss order should be placed at $0.88889, the support level, to minimize potential losses. The target price could be set at $1.06, a conservative estimate based on the forecast, aiming to capitalize on the anticipated price increase. This strategy capitalizes on the bullish momentum and aims for a profitable outcome within a relatively short time frame. Given the Aevo's price history, forecast, and support resistance levels, a medium-term investment strategy appears most suitable. While the price has shown some recent fluctuations, the forecast indicates a slight upward trend. The support price of $0.4628 provides a safety net, while the resistance level of $0.5035 suggests potential for price appreciation. Therefore, an aggressive medium-term investment strategy would involve a long position on EOS. A suitable entry price would be around $0.485, aligning with the forecasted price and offering a good risk-reward ratio. The stop loss should be set at $0.465 to limit potential losses. If the price drops below the support level, the target price could be set at $0.50, aiming to capitalize on the potential upward movement towards the resistance level. This strategy allows for potential profits while managing risk effectively. Given the price trends and forecast for TRON, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a slight downward trend, with the current price hovering near the support level of $0.155. The forecast suggests a potential for slight upward movement towards $0.16, but the overall trend remains uncertain. Therefore, a short-term long position is advisable with a conservative approach. An entry price of $0.158 would allow you to capitalize on a potential upward move towards the forecast price of $0.159. The stop loss should be set at $0.156 to protect against any unexpected price drops below the support level. The target price should be set at $0.161, aiming to capture a small profit before the price potentially reverses or encounters resistance. This strategy prioritizes risk management and aims to profit from short-term price fluctuations while minimizing potential losses. Based on the provided price information for Coin, a medium-term investment strategy appears to be the most prudent approach. The historical price data reveals a fluctuating trend with periods of both upward and downward movement, while the forecast suggests a slight upward trajectory. The recent price action has been somewhat volatile, indicating potential for further consolidation before a clear directional breakout. A medium-term strategy allows for capitalizing on this potential while mitigating the risks associated with short-term fluctuations. To implement this strategy, an entry price of $0.443 could be considered, aligning with the current price level. A stop loss could be placed at $0.4038, the support price, to limit potential downside risk. The target price could be set at $0.4946, the resistance price, aiming to capture a significant portion of the potential upward movement. This strategy allows for a balance between risk and reward, taking advantage of the forecast while safeguarding against potential price reversals. ShibaInu shows a slight upward trend in the past 2 weeks, with the forecast suggesting continued growth in the coming week. The support price of $0.00000181 provides a safety net, while the resistance price of $0.00000190 indicates a potential ceiling for the immediate future. Given this context, a long-term investment strategy appears promising. For this strategy, an entry price of $0.00000184 is recommended, slightly below the current price, allowing for a margin of safety. A stop loss at $0.00000181, just below the support price, would limit potential losses. The target price should be set at $0.00000190, aiming to capture the potential upside movement towards the resistance level. This approach allows for a measured, potentially profitable investment in ShibaInu over the long term. Dogecoin's recent price history demonstrates a general upward trend, with prices fluctuating around the $0.13 range. The forecast suggests continued growth, with prices projected to reach $0.153 within the next week. Considering the positive price momentum in the forecast, a long-term investment strategy appears promising. To execute this strategy, we would enter a long position at the current market price, around $0.142. A stop-loss order should be placed at $0.13, protecting against a potential reversal in price. Our target price would be set at $0.153, aligning with the highest forecasted price. This approach capitalizes on the anticipated upward trend while managing risk through a well-defined stop-loss order. Given the price trends and forecast for HookedProtocol, a medium-term investment strategy appears most suitable. The historical prices show a generally upward trend, with recent fluctuations suggesting consolidation. Forecast indicates continued upward momentum, with prices projected to reach around $0.533 in the coming week. This suggests a bullish outlook for HookedProtocol in the medium term. Therefore, a long position is recommended. An entry price of $0.456, slightly below the current price, allows for a potential entry point as the market consolidates. A stop loss should be placed at $0.4234, aligning with the historical support level to minimize potential losses. The target price can be set at $0.5072, the recent resistance level, aiming to capitalize on the projected price increase. This strategy balances risk and reward, allowing for potential gains while mitigating downside exposure. Given the price trends and forecast for Aevo, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a recent upward trend, with the current price hovering near the support level of $0.3724. The forecast suggests a continued upward momentum, with prices potentially reaching as high as $0.416 in the coming weeks. This indicates a bullish outlook in the medium term. Therefore, a long position on Aevo is recommended for a medium-term investment strategy. The entry price should be set at $0.375, slightly above the current support level to allow for some price fluctuation. The stop loss should be placed at $0.365 to protect against any unexpected downward movement. The target price should be set at $0.405, aiming to capture a significant portion of the potential price appreciation, while still leaving room for further upside. This strategy aims to capitalize on the anticipated upward trend of Aevo in the medium term, while also managing risk effectively. Given the price trends and forecast for Notcoin, a medium-term investment strategy appears most suitable. The historical prices show a consistent upward trajectory, with the current price hovering near its support level of $0.007351. The forecast suggests a continued upward movement, with prices potentially reaching $0.00864 in the coming weeks. This indicates a bullish outlook in the medium term. Therefore, a long position is advisable to capitalize on the potential for a price increase. An entry price of $0.0078, slightly above the current price and close to the support level, would be a good starting point. The stop loss should be set at $0.0075 to protect against any unexpected price reversals. The target price could be set at $0.0085, aiming to capture a significant portion of the potential price appreciation. This strategy allows you to benefit from the upward momentum of Notcoin, while managing risk effectively. $1, based on the provided historical price data and the forecast. Suncoin appears to be in a downtrend. The historical prices show a consistent downward movement over the past 2 weeks, and the forecast predicts further declines in the coming week. This suggests a bearish outlook for Suncoin in the short term. $2. Therefore, a short-term investment strategy focusing on a short position would be advisable. An entry price of $0.0185 aligns with the current price and the forecasted price. The stop loss should be set at $0.0192, slightly above the current price, to limit potential losses. The target price could be set at $0.0179, the lowest point predicted in the forecast, allowing for a profit if the price declines as anticipated. This strategy capitalizes on the potential for a short-term price drop in Suncoin. Pepecoin shows a volatile price pattern, with recent fluctuations around the $0.000010 mark. While the forecast indicates a slight upward trend, the short-term outlook remains uncertain. Given the tight range and lack of a strong directional bias, a short-term investment strategy is recommended. An aggressive short-term strategy would involve entering a long position at the current price of approximately $0.000010. A stop-loss order should be placed slightly below the recent support level of $0.000093 to limit potential losses. The target price could be set at $0.000017, aligning with the first forecast price, aiming to capitalize on a potential short-term price increase. This approach allows for participation in the potential upside while managing risk through a well-defined stop-loss order.